Monday morning, folks, and a very warm welcome to February's first episode of the Finmet Mondays podcast. Sunil, we've had a more power-packed weekend for in a very long time than a power-packed week. The budget was presented, and there was quite a lot of talk over what the tariffs were. And we also had on the international front Trump imposing his tariffs specifically on Canada and Mexico, and what that means for gold prices. What are your takeaways from these two events, and what does that mean for domestic and international spot gold prices?
The good thing from the Indian point of view is the budget pretty much left the duties on gold and silver, bullion, doré, etc., unchanged. There were minor changes in terms of platinum findings. Duties came down and actually got rationalized. Within the next 3 months, there'll be a couple of more HSN codes, I think, to help the customs deal with some of the transactions that have been taking place where gold has been coming in. The import duty has not really changed for gold and silver and for doré, so business carries on as normal. In fact, I would mention also that the UAE SEPA has not changed, so the TRQ benefit is still available in the next year for people who want to use it, and so therefore they should apply. The applications for the next set of TRQ quotas is closing at the end of this month, and so people should apply as soon as possible. If they need help, they should reach out to somebody from Finmet, and we're happy to help them with the TRQ application process. Trump has levied 25% duties on imports from Mexico and Canada, and the important thing for the gold market is that almost 80 to 90% of the demand of gold and silver for the US comes from Canada or Mexico. So companies who are using gold in their production cycle, jewelry companies, etc., or using silver, now are going to have to look at what their supply chains are looking like. And that's one of the reasons why in preparation for the tariffs, we saw a large amount of imports of gold and silver into the US. What it meant for the customers in India is that there's now a shortage of readily available gold and silver bullion in London because most of that metal was moved from London, and London normally supplies India. So what we're seeing right now for the Indian market is there's going to be a little bit of a squeeze in terms of physical metal. We're seeing that squeeze also in terms of higher lease rates. So customers, borrowers of gold loans can expect a higher lease rate going forward till this shortage is sorted out, which should take maybe 6 to 8 weeks before the central bank gold starts coming back into the market.
If there are any inquiries on how to apply for the TRQ quota and anything related to this particular provision, I'm going to be putting in the number of our representative who's going to be able to help solve all your questions and give you a little bit more information. Thanks, Sunil. Thanks for that quick roundup. I think from the price point, we're looking at, again, unprecedented waters. I think it's been a while since I've said that. 2790 was finally broken, and we are into new territory now. Let's quickly look into the technical outlook and see where the new levels are. We continue to remain in this ascending channel that you see here right from the start of 2025. Over the last 1 week, we did see a drop, especially last Monday, where we dropped to the support, which is at 2725. The immediate resistance that gold has, that it has to break, is 2870. Although now this might seem a little distant, given that it was not able to do so on Friday. This is the 4-hourly chart for US spot gold. If you notice the trajectory, we have been behaving or kind of adhering to this uptrend channel. But right over the last trading hour, we saw some pullback in the 4-hour charts. This sort of a pattern that we see here is typically what we call as an evening star pattern, which is right at the end of a bull uptrend. We see a big descending candlestick that it generates, and we see a short-term pullback as the markets respect these new prices that are being formed in the metal. So there's an expectation that even though 2815 as a new high was formed, you might see a little bit of a pullback to familiar levels, which is around 2786 right after the market opens. In the near term, the main target that we have for gold after 2817 is broken is 2878. This is obtained by looking at this entire uptrend that we have right from the 18 December low right here when the uptrend started to the recent high that we hit on Friday, which is 28.15. If we project this upwards and we see where the targets are, we get 28.78 as a resistance. This is the first level that we would expect gold to break in its march towards 3,000, which is what Finmet's projection is that gold might hit for the remainder of the year. Just to reiterate the view, we might see some pullback on Monday morning and Tuesday as we enter into the week. That pullback might lead us to familiar territories around 27.85, where the first pivot arises. But the longer term view is that we might break 28.70 and eventually reach and breach 28.78 also in the near to medium term.
Thanks a lot, Sean. I think it's really interesting to see the way that the markets are behaving, and also the fact that the London market and the New York markets are sort of disconnecting, which is creating that volatility. I would mention that we're going to hold a seminar at the on in Mumbai on February the 22nd. Finmet will hold a seminar in conjunction with the LBMA to basically educate the market about how the London markets work and how the physical deliveries happen, so that people can get a more in-depth understanding of what local London is and how local London deliveries take place.
See you next week, Sunil. Thank you again for the roundup and see you very soon. Thank you so much.